Here from quantlabs.net. Okay, so as promised, I want to go over the results of the market calls I made roughly about a week ago. There's two postings that I put up. So I made these calls on March 7th, 2016. Roughly, well, exactly a week ago on Monday last week. Also, I made the same calls for both the US. We got 4 calls I'm going to analyze in this video, as well as 2 calls for the UK. So let's get to it. Now, these are not something I would recommend that you go out and do. I'm just trying to do these as part of my idea for the spreadsheets that got generated in the videos I went through last week. So let me just pull those videos up so you know exactly what I'm referring to. There are 2 videos.
Hey there, how's your trading going?
All right, so under here you have scanning U.S. markets for hot sectors to pair trade. And then this other video here, scanning UK markets for hot sectors to pair trade. And they both have the detailed articles that I'm referring to on the long and shorts and the market sectors. So a couple things we need to look at just generally before we proceed. I'm going to pull up the the S&P 500, so we know what kind of market we've dealt with for the last 5 days. So I'll do a 5-day chart on the GSP, and you can already tell generally everything shot up. So that's generally what we're looking at in an upmarket swing. And let me try to pull up the, not sure if I can do the FTSE. Yeah, here we are. So let's do the FTSE 100 as well for the London Stock Exchange. Let's pull up the 5-day chart here and check that out. So it's kind of flatlined. So this may be actually a better chart and index to work with. So let's do England first. So here's the UK, the ones that I've focused on for both the LSE, London Stock Exchange. So the markets I looked at were both business services and money central. Now let's take a look at this pair, the long on the, actually I might have these already loaded up. So, okay, yeah, I do. Okay, so I'm going to look at the 5-day chart, the standard chart, Stan L, which was a long for the services, a money central category for the London Stock Exchange. So we've got our long on the Stan.L, and now we're going to do a comparison with the Barclays as the short. So we're going to add that in the Barclay comparison, BARCL. So this is Barclays. So let's see how we did. So we may have actually timed it quite nicely. Check that out. We've got that meeting on March 8th, the Tuesday. So that might be pretty good. So what's the dispersion of the spread? So we're looking at 2.45 and it's 4.2. So let's just do a little calculation here on the percentage on that. These are different pairs. So what are we looking at? We've got 2.45 minus, well, actually it's only a dispersion of 4.2. So that really is 4.2. So that would be a 6.65 return if we were to continue that trade for the last 7 days. That's not bad. So if we put on basically a trade here for this pair as an arbitrage, we would have gotten about a 6% spread on that trade. Not too bad at all, I guess. Okay, so let me just put the results here. So that would have been a 6.65 return on that one. Okay, so let's do the second one. All right, so the second one is business service. Let's do the long, which is SPRSL. SPRS.L. Look up. Okay, so we are looking for, it might be better if I do it this way, cut and copy. So the SPRS long SPR surge component equity. Let me just go into the proper spreadsheet to see if I can find it. Business service. Oh, my mistake. We were looking for SRPL. SRP.L. SRP.L. My mistake. So circle group, 5-day chart. What does it look like? So then actually it's gone down. So this may not be a good trade. So we went with the short as being RPS.L. Okay, let's check that out. Yeah, let me just reload that other chart. SRP circle, that's the one we want. I'm going to load up the 5-day chart. We want to do a comparison of our short, which was RPS.L. RPS.L. Okay. Ooh, we would have lost money there. So, yeah, so we're in the hole in this one. So we got, is moved up 1.80, but actually our short has gone against us on that call. So we would have lost, how much would we have lost? It's negative 7.01. Not a good one there. So that was our return of negative 0.701. Okay, so let's start looking at the US to see how those did. So let's take a look at the first one of residential, REIT, residential, EQR, short OAKS, Oaks. Okay, so let's start again. So we are looking at our long of EQR. How did this do? EQR. And we want the 5-day, and our short is Oaks. Oaks. So that looks okay. Let's do a comparison here of our Oaks. I guess that would be it. Beauty. Okay. Check this out. So again, the timing was good. The next day, we've gone up 1.08. So we've gone up 1.808% on the long, and our negative went down 5.81. So that's exactly something we can work with, plus 5.81 difference on the short. So that brings us to 6.89. 6.89% return over 5-day chart. Not bad. I guess it could be better. So let's do our next one. So mortgage investment. Our long was LEN. Let's do that. Lennar. 5-day chart. And our short is BZH. Okay, so a short comparison, BZH. BZH. How did that work out? Ooh, went against us. So we're up 0.22, 3.7, 3.48% negative. Did not do too well. Okay, so that's the return there. And the mortgage investment field. So our long is HTGC. HTGC. 5-day chart. And how did the other end do? JDGW, the short. So JGW. Oh, no. We want to do a comparison. It's gone up a little bit. JGW. Oh, well, we got another one. This looks like a nice winner here. So we got 0.61. So we got 0.61. 0.61 plus, this has gone down 10.66. So that's up 11.27%. Okay. Major airlines now, VLRS. These are long VLRS, so that's okay. So this does not look too good. Maybe it is. So our short will be UAL. Let's see how UAL did. Comparison, UAL. Ooh, that went against us as well. Okay, so we're Actually, we got lucky here. This is down 2.297, but still, that went against us. 2.97 plus, clear that. 2.97, did I get that? Negative 2.97 plus, no, gotta clear it. 2.97. Okay, so 6.14 plus 6.14, 3.17 in the hole. So how much was that? 3.17. So all in all, some were against us, some did okay. This right here, this trade was a clear winner. This one did okay. This one did okay, but as you can imagine, we've had a small loss here, a small loss there, a big loss here. So in a way, we're 50-50. No different, but the cool thing about this strategy we're working on, these would just be added to a watch list. So these would be watched, would be watched daily. I'll be showing that in various steps in this strategy. But as I said, some of the timing was just perfect. I think this one was timed really good, and one of these two was timed really good as well. So it can work. I just got to keep playing with it, do more of these calls, and then hopefully as the strategy for the pair trading arbitrage will clear out all the dud trades as part of the watch list and part of the screening process to get rid of these. But again, you're going to be using various statistics or implied volatility, or in my case, I just posted on Friday the R squared technique, and there's other capabilities to know how to time your trade. So what am I referring to in my strategy? Again, is this one, which we're going to start the lessons on actually starting tomorrow night on Tuesday. But let me just show you what we're referring to. Is this one the pair trading strategy, which is pretty good, and I got this whole video here on that, so that's pretty good. All right, so let me just show you that if you're really interested in this type of thing. Just do a search on my blog posting for anything arbitrage, and you should be able to find it if you like for this particular set of steps. One other thing I would like to mention here before okay, this must be the details. Yeah, so these are the details of what I'm referring to. What I just showed you on the market call is basically identifying using government data, American government data, and what we did was in this market call was to scan hot markets or hot sectors, and from there we're able to pick the long and the short. Again, we're just using EPS, earnings price per share. So we're really just doing these first 4 steps, which I'll be introducing this in pretty well detail with the source code, obviously in Python, which will be introduced second week of May. And then on top of that, we go through other processes and steps, which we didn't do any of these market calls, was screening our watch list, using technical analysis for timing the trades, and other things like beta or R squared process, applied volatility, using some statistics. And then once we get into that and put on our positions, we have to obviously have a methodology to track those positions and manage them, as well as using the Kelly criterion to track our portfolio and how our performance is. And on the future trades, our system will allocate the right amount of capital to the next trade based upon how the performance has been going for the system. So that's pretty well what we're looking at with this particular arbitrage pair trading strategy. And this is just the first set of steps as an example of many calls. And I'll be putting up another video later today on, all these different market sectors for both, let's say, US and the UK. There's over 240 market sectors, and some of them are defensive, some of them are cyclical. So it's depending upon where the regime you're in or what market conditions the economy's in, and there's literally limitless amount of stock selection come out of these pairs, and being able to trade on these pairs where, as I said, you will get winners like this with an 11% return in 5 days. But this, on the other hand, you will get the occasional losers like these ones here, which again, what we're trying to prevent here using these other things like screening a watch list, technical analysis, all these other metrics to prevent those winners from actually being traded, preventing the losers from being traded. But I just wanted to give you an idea of where we sit. But using these the techniques, all these other ones, screening the watch list, technical analysis, and doing it in an automated way will remove a lot of the guessing, as opposed to, I think based upon my hunch, I think real estate will do well in the next week, or mortgage investment will do well. Outside of that, you're really guessing, but yet, based upon trying to find your pair for the long and the short, you're going to run into problems because you're just using really easily just some kind of emotion or guesswork or some news story you read, and you're not really using data. And even if you use some sort of data and doing your calculations manually through Excel or whatnot, these scripts that I give you and the lessons that I show live with the query answer as part of a kind of like in a classroom environment will save you a ton of time and automate all that. And that's why I'm doing these lessons live, as well as giving the source code as well, to prevent you from guessing, because I've gotten creamed myself on guessing as a human trader. But using these scripts in an automated fashion can save you a ton of money and a ton of time, and enables you to scale up the ability to find the maximum trading opportunities out there. So again, that's why I have this one particular strategy, and there's going to be 2 more, as I have hinted at with this course series. Is we've got phase 1, which again is the arbitrage pair trading, which I just showed you right now, and then we get into phase 2, where I'm going to be showing you some algorithms that you can use for both options and futures trading, and then the phase 3, where you can use Forex, like macroeconomic data, for the massive volatility moves you can get between two currency pairs as well. So these are some of the cool things that I'm shooting for over the next few months. So that's why I'm highly recommending people to obviously join my membership here, at a pretty affordable rate. Hopefully this will help you out, give you some lessons learned on some of the realities you face as a human trader. Just doing something simple like picking off a pairing of a long and a short pair, as well as knowing the right market sectors to pick based upon your market conditions at that day or at that point. Hopefully this will help you out, and I'll talk to you soon. Later.